Inflation is a term we hear often, especially in today's economic climate. But what does it really mean? At its core, inflation refers to the general increase in prices of goods and services over time, which erodes the purchasing power of our money. This means that what you could buy for $1 last year might cost you more today. For many, this can lead to a tightening of budgets and increased financial stress. Understanding inflation is crucial because it directly impacts our personal finances, from the cost of groceries to housing expenses. In this video, we'll dive into the relevance of beating inflation and why it's more important than ever. With rising prices affecting everything from everyday essentials to long-term savings, it's essential to equip ourselves with knowledge and strategies to navigate these challenges. We'll explore practical tips and techniques that can help you safeguard your finances against the relentless tide of inflation. Whether you're a seasoned investor or just starting to manage your budget, there are actionable steps you can take to protect your hard-earned money. So, if you're ready to learn how to combat inflation and secure your financial future, stick around. This journey will not only be informative, but also engaging, as we uncover the tools you need to thrive in an inflationary environment. Let's get started. Inflation is the rate at which the general level of prices for goods and services rises, leading to a decrease in purchasing power. It's typically measured using indices like the Consumer Price Index, CPI, which tracks the price changes of a basket of consumer goods and services over time. When the CPI increases, it indicates that consumers are paying more for the same items, signaling inflation in the economy. There are several causes of inflation, primarily categorized into two types: demand pull and cost push factors. Demand pull inflation occurs when the demand for goods and services exceeds supply, often driven by increased consumer spending or government expenditure. On the other hand, cost push inflation arises when the costs of production increase, leading businesses to pass those costs on to consumers in the form of higher prices. This can be due to rising wages, increased raw material costs, or supply chain disruptions. The effects of inflation are felt across the economy, particularly in terms of purchasing power and savings. As prices rise, the value of money decreases, meaning consumers can buy less with the same amount of money. This can strain household budgets and lead to a decline in living standards. Additionally, inflation can erode the value of savings, as the interest earned on savings accounts often fails to keep pace with rising prices. Understanding these dynamics is crucial for making informed financial decisions in an inflationary environment. In this segment, we'll hear from some leading economic experts who have valuable insights on managing inflation effectively. Featured in this video are renowned economists and financial advisors, including Dr. Jane Smith, a professor of economics at a prestigious university, and Mark Johnson, a seasoned financial planner with over 20 years of experience in investment strategies. Their expertise will guide us through the complexities of navigating an inflationary landscape. Dr. Smith emphasizes the importance of diversifying investments during inflationary periods. She suggests allocating a portion of your portfolio to assets that historically perform well in inflationary environments, such as real estate and commodities. These assets tend to retain their value or even appreciate when prices rise. Mark Johnson adds that investing in inflation-protected securities, like Treasury inflation-protected securities, TIPS, can provide a safeguard against the eroding purchasing power of cash. For actionable advice, both experts recommend reviewing and adjusting your budget to account for rising costs. They suggest prioritizing essential expenses and finding ways to cut back on discretionary spending. Additionally, they encourage viewers to consider increasing their income through side hustles or freelance work, which can help offset the impact of inflation on personal finances. By implementing these strategies, you can take proactive steps to protect your financial well-being during inflationary times. Stay tuned as we explore more insights and practical tips to help you thrive in this economic climate. When it comes to beating inflation, exploring various investment options is essential. One of the most effective asset classes to consider is real estate. Property values often rise with inflation, making real estate a solid long-term investment. Additionally, rental income can increase over time, providing a steady cash flow that keeps pace with rising costs. Commodities such as gold and oil are another avenue worth exploring. These tangible assets tend to hold their value during inflationary periods, as their prices often rise when the cost of living increases. Investing in commodities can serve as a hedge against inflation, protecting your purchasing power. Stocks also play a crucial role in an inflation-resistant portfolio. Companies that can pass on increased costs to consumers, such as those in the consumer staples sector, often perform well during inflationary times. Diversifying your investments across different sectors can help mitigate risks and enhance returns. One specific investment option to consider is Treasury Inflation-Protected Securities, TIPs. These government bonds are designed to protect against inflation, as their principal value increases with the Consumer Price Index. This means that as inflation rises, so does the value of your investment, ensuring that your purchasing power remains intact. By diversifying your investments across real estate, commodities, and stocks, and including inflation-protected securities like TIPS, you can create a robust strategy to hedge against inflation. This approach not only safeguards your assets, but also positions you for potential growth in an unpredictable economic landscape. As prices continue to rise, effective budgeting becomes more crucial than ever. One of the first steps in managing your finances during inflation is to track your expenses diligently. Consider using budgeting apps or spreadsheets to categorize your spending. This will help you identify areas where you can cut back and adjust your budget accordingly. Regularly reviewing your expenses allows you to stay on top of your financial situation and make informed decisions. Prioritizing essential spending is another key strategy. Focus on necessities such as housing, food, and healthcare, while being mindful of discretionary expenses. By distinguishing between needs and wants, you can allocate your resources more effectively. Additionally, aim to increase your savings, even if it's just a small amount each month. Setting aside funds for future needs can provide a buffer against rising costs. Building an emergency fund is particularly important during inflationary times. This fund acts as a financial safety net, allowing you to cover unexpected expenses without derailing your budget. Aim to save at least 3 to 6 months' worth of living expenses in a separate account. This not only provides peace of mind, but also helps you avoid high-interest debt when emergencies arise. By implementing these practical budgeting strategies, tracking expenses, prioritizing essential spending, and building an emergency fund, you can better navigate the challenges of rising prices. These steps will empower you to maintain financial stability and adapt to the changing economic landscape. In the face of rising inflation, long-term financial planning is essential for safeguarding your financial future. One of the most effective tools at your disposal is retirement accounts, such as 401ks and IRAs. These accounts not only provide tax advantages, but also allow your investments to grow over time, helping you build a substantial nest egg that can withstand the effects of inflation. By consistently contributing to these accounts, you can take advantage of compound interest, which can significantly enhance your savings over the long haul. Long-term investments, such as stocks and real estate, also play a crucial role in combating inflation. Historically, these asset classes have outpaced inflation, providing returns that help preserve your purchasing power. By adopting a buy and hold strategy, you can ride out market fluctuations and benefit from the overall growth of the economy. It's important to regularly review and adjust your financial plans to ensure they align with your long-term goals. Life circumstances and economic conditions change, so staying proactive is key. Set aside time each year to assess your investments, savings, and overall financial strategy. This will help you make necessary adjustments to stay on track. Lastly, staying informed about economic trends is vital. Understanding how inflation and other economic factors impact your investments can empower you to make informed decisions. By keeping an eye on market conditions and adjusting your strategies accordingly, you can better position yourself to thrive in an inflationary environment. Long-term financial planning is not just about today, it's about securing your future. The key strategies we've covered. We explored various investment options, including real estate, commodities, and stocks, highlighting how diversifying your portfolio can help protect against rising prices. We also discussed practical budgeting tips, such as tracking expenses, prioritizing essential spending, and building an emergency fund to navigate the financial challenges posed by inflation. Moreover, we emphasize the importance of long-term financial planning, including the role of retirement accounts and the need to regularly review and adjust your financial strategies. Staying informed about economic trends is crucial for making proactive decisions that can safeguard your financial future. Taking these proactive financial steps is essential in today's economic climate. By implementing these strategies, you can better position yourself to not only cope with inflation, but also thrive despite it. Remember, the sooner you start, the more prepared you will be for whatever challenges lie ahead. If you found this video helpful, we encourage you to subscribe to our channel for more insightful content on personal finance and investment strategies. Don't forget to like this video and share it with friends and family who might benefit from these tips. Your engagement helps us create more valuable content for you. Thank you for watching, and let's continue this journey toward financial empowerment together.